Good Tuesday morning, everyone. We are on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. And Jim, the gains continuing here Tuesday.
Yeah, this time it's a new leadership. It's led by the oils. I never like oil leadership, just to be really clear. I like financial leadership. I like transport leadership. I like somewhat degree healthcare leadership. I obviously would love industrial leadership, but because of the trade war situation, we don't have that. So we're really being led by Chevron, Exxon. A lot of this is my guest tonight, Core Labs. David Dempster, just talking about how oil is, the growth of the use of oil is going from 1 to 1.5%, but the amount of drilling is declining. That's not something that he expected. It's why they pre-announced at the end of June, which was shocking given how consistent they are. But what he's saying is, listen, oil's going to 100. And it's going to 100 because these countries aren't providing new oil. So there's really a supply problem and a demand issue. So Permian can't make it up, even though there's tremendous drilling in the Permian. So let's add, look, I think that the bull case is strong here. The bear case may be runaway oil inflation, given the lack of national oil company drilling, which is quite surprising given the fact that oil is so high.
And you guys own Schlumberger for Action Alerts Plus.
Look, we love oil. And now, we've been wrong on some oil stocks. We're wrong on Apache in terms of when we bought it and when we sold it, and I recognize that. I am doing a segment tonight on Mad Money about something I was wrong too. Why do I spend so much time on what I did wrong? I have to learn. We could sit here and talk forever about what I did right Facebook, what I did right Alphabet, what I did right Amazon, what I did right Apple. What does that do? It doesn't do anything. You have to analyze your mistakes, try to find out what you did. It's what www.actionalertsplus.com does. What I try to do is tell club members, and this is going to be again at 11:30 tomorrow, look, here's what I did wrong and why. I have always felt that unless you're willing to dissect what you did wrong, you'll never be a great pro. But why don't people do it? They don't do it because you look like an idiot when you do it. Yesterday, I was with Joe Terranova, my great friend, and with Stephanie Link, of course, one of my best friends, on halftime, along with Pete Najarian. And they both beat themselves up because they missed things. I both enjoyed it, but also felt badly that they went self-immolation. But I go self-immolation, which is why I think the call is so important. You need Mad Money. Last night I did Stitch Fix. I said, look, I was too conservative. If you don't analyze these things, you do not get better.
That's why we learned so much from you. So,
well, look, I'm confident enough in my life at this point to be able to talk about what I did wrong, even if it costs us, frankly, subscribers. There's nothing I can do. I cannot learn from my winnings. Learn from your winnings. What do you do? Hey, you know what? I analyzed Facebook, and at $25 and $40, I recognize there's great value because of Instagram. No, much better to look at, say, why we sold Allergan, why we bought Allergan, why we got Apache wrong, why we think we're going to be right this time in Cimarex, why we've been wrong in Goldman, but why we think we could be right because of CCAR. That's what the call is about. That's what the product is about. One of the reasons why, look, am I pitching the product? No, I'm pitching tomorrow's 11:30 conference call because I think it's going to be very, very good. I've been working very hard on it for the last 10 days. But look, it's when I look at what the value that I can add, the most important value I can add is to analyze my mistakes without fear or favor. I do not care. I want you to learn from me, and particularly the things I did wrong.
And Jim, you also take member questions on these conference calls.
Yeah, we want as many questions as possible. And look, you can make them far-ranging. You can say, hey, Jim, why did you scale out of Lilly, even though we still have 550 shares, even though Lilly has been the hottest drug stock? And I will tell you, because we owned the hottest drug stock. We didn't want to be able to give back the gain. Nordstrom, why did you sell some Nordstroms last week? Well, we sold some Nordstrom because we genuinely believed that no matter what was said, it wouldn't be enough. That's been right. Why did we sell some Constellation? Well, it bounced back up, and we had a very good gain on the initial part of Constellation. We didn't want to give back the last, so it was a very profitable trade. And I think that someone might say, well, why did you buy Constellation in the first place, given the fact that beer looks like it's slowing and given the fact that wine's not that good? And the answer is, well, wait a second. We've had a very good run on this, and the reason why we took profits, and we did take profits, was because we did fear wine, and we recognized the category of beer is not so good, but Constellation has done the best with Modelo and Corona. And we analyze PepsiCo. Analyze. Stock of the day, by the way. total wall-to-wall coverage. We flood the zone these days now with one stock every single day at realmoney.com. And I think that analyzing what happened with PepsiCo, where we bought the stock lower, actually makes sense. Why? Because this was the analyst making a mistake, and that's important to review too.
All right, Jim, you mentioned Real Money. You have a column this morning about President Trump's new Supreme Court pick.
Yeah.
He's good for business.
I think that elections matter. You elect Donald Trump, you're going to get Supreme Court justices who are good for business. That's just the way it works. And I think that it's not just short term. Thank you, Matt Horweed, for pointing this out to my writing partner. But it's also a longer term issue. When you get, remember, he's going to be on the Supreme Court for a long time, health willing. He's a rigorous thinker. I've talked to some people who actually know him and actually follow him. He's a rigorous thinker, but he is on the side of Trump. I mean, no one is going, well, Justice Warren was a surprise pick by Eisenhower, and he turned out to be far more of a Democrat than Eisenhower realized he ever would be. But I think that when you have a pro-business Supreme Court, it takes away uncertainty. You take away uncertainty, you then get more buying. Trade war, on the other hand, genuine uncertainty, less spending.
And Jim, I always appreciate your perspective on these Supreme Court issues. Your Harvard Law degree, so we should just point that out.
Thank you. Thank you very much.
All right, Jim, Jeffrey says a note on United Technologies. They say you may not have to break it up.
Ah, that's silly. I mean, once you get Rockwell Collins, you got a critical mass in Pratt & Whitney and service for engines and parts of an aerospace, and you frankly don't want to be weighed down by Otis or climate controls, which can do so much better on their own. This one is, to me, a done deal, and I think that Jeffrey's piece was just plain wrong. It reminds me of American Standard. If you want to go Google that, and you'll see exactly what I mean.
And I looked up your interview with Greg Hayes on Mad Money back in March. He said he owes investors a decision on this by the end of the year.
Yes, so he's going to make that one shorter. I think it's going to be after Rockwell Collins closes.
Jim, last night on Mad Money, you talked about the potential buying opportunity in Hasbro, especially with the Toys R Us.
Yeah, I mean, look, Brian Goldner was basically saying, listen, after this quarter, the one that we're currently in, things will get better and the comparisons will get easier because of Toys R Us. Now, he did not say this quarter is good. What I'm saying is, given the fact that the stock's beginning to run, you may have to anticipate that and buy half a position, then buy the other half when or if it comes down, when they report a quarter that will not be up to stuff.
Okay, Jim, you mentioned it earlier. You have Core Lab on tonight.
Yeah, Core Labs is really important. David Dempster's been on 23 times. He's been remarkable in terms of his knowledge. Remember, it's a technology company that talks about reservoir mapping, and the reservoirs are being depleted, and that's why he thinks oil can go to 100.
All right, Jim, we're going to continue talking about stocks, including your take on Pepsi. We'll go deeper into that. Please join us on ActionAlertsPlus.com.